When I started trading, I would set myself up for failure when it came to prop firm challenges. I was never able to pass them. Not because I couldn't trade profitably, because I wouldn't make enough to pass their challenge, or I would end up getting bored and gamble the account away or be impatient. This rule of one is something that prop firms don't want you to know about because it's going to stop the average user from keep on rebuying accounts again and again and again. But I had to discover this the hard way. Every time I thought I was ready for a prop firm challenge, I said I was going to be more disciplined. I said I'm going to stick to the plan. But guess what? I never did. And the crazy thing is, when most people start out in trading, we want to use prop firms because they're an access to capital before we go on a live account. But in the beginning, I really wish I had something that I was able to leverage low investment cost and high return, but that comes with a cost of skill gap until I discovered the rule of one, which I'm going to explain. So let's get into it. So let me take you back. The frustrating part is that I could trade. I had a strategy that worked. I was consistent, but when it came to taking prop firm challenges, it wasn't enough. When I first started trading, you had a rule to make 10% in 1 month, otherwise the challenge fails, and that challenge cost $500. I knew that I couldn't make 10%, but I still wanted to try anyways. Of course, it doesn't go well. We think that we are ready for it when really we're not. That is the caveat. They're giving you easy access to money, but there's a catch, which is being able to pass through their rules and the actual challenges. If you fast forward to today, I'm a completely different trader. I have almost 90% win rate on passing challenges, as well as pulling payouts consistently monthly on my futures account, which I document live and live stream my trades every single day and have done so on YouTube for the past 3 years with a live track record. But like I said, in the beginning, it was frustrating because I knew I was profitable, but still couldn't bridge the gap to make me profitable on prop firms. So I found out that what prop firms did to me was change my mindset. I always had the drawdown limit at the back of my head, and the profit target made me feel like I was behind or not working towards a goal. So I was being chased from behind and the goal was getting further away, especially with rules like a trailing drawdown. This was something that completely changed my mindset. This forced me to overtrade when I was behind. I would take setups that weren't even there just because I felt like I needed progress because there was a target that had to be made. And the worst part is, when I had a losing day and I was in the red, I felt like I needed to somehow change this and make it in the green, especially when my account was showing physical colors of red and green. It felt like a game and I was not in the right mindset. Does this sound familiar? Here's the thing. The challenge isn't actually testing your strategy. If you've had a solid strategy or follow a solid strategy, then it was never the strategy that was the problem. If you don't have a strategy, I'm going to explain you a simple strategy in this video that is going to help you pass challenges. But with you having a background of the situation that I was in, that I think a lot of people can relate to, I want to explain to you exactly what this rule of one is, get onto the charts as well, and show you how to apply a strategy, how to apply the rule of one on everything on a day-to-day basis. But we're going to need the charts for this. So let me switch to the charts and then let's continue from there. So let me explain to you the rule of one. Now, what I'm going to use a live example of a trade today I took in the group during our London session. Nice little $1,000 trade, something clean here, not too heavy on risk, but ending out the day profitable. So the rule of one means one session, one pair, and one time frame, meaning you're not going to jump between different time frames to choose an entry. You're going to choose one time frame, one session, one pair. I'm going to tell you the exact strategy I used to enter this, and that rule is going to change everything because it's going to allow you to focus and not blow your account because you only have one session, one pair, one entry. Okay, time frame. So for this example, if you are trading a faster session, the NYSE, you can apply the strategy I'm about to teach you on a 5-minute time frame. If you're trading the London session, then use the 15. So this time I use the 15 for my entry here. I'm going to explain the exact strategy. First thing we want to have is something called bias. Now, whatever the previous 4-hour closed is exactly the direction you want to take the trade. So if the previous 4-hour close bullish, you want to take buys. If the previous 4-hour close bearish, you want to take sells, right? This is a simple strategy to get you started. There are multiple ways that I used to enter in the market, but I want to give you something and also break down this trade for you. So for me today, we were coming to major daily support zone here. We can see how many reaction, almost 100% win rate of buys from this daily support every single time. So once we come back down here, and this was actually into a 4-hour zone, I want to play the same idea of taking buys. So I know that, hey, I can play out that idea that today I should be looking for buys when we're down here. Beautiful. That price action made me an area that I can trade in because I want to trade in areas with clean candles. When you open the chart, look for your trading zones to take entry in areas where there is clean candles because you have no resistance. You should be able to move smoothly. Next problem zone, up there, right? So what we want to look for then is we want to look like some form of structure. So whenever we have bearish, bullish, bearish, that's going to create a structure. Another structure way we can create structure is to have bullish and then a bearish close. That is going to create something which we call a resistance, right? But right here, we create a structural point. If you go into 5 minutes, you'll see how that big structure is now created. We want that because in today's market, I'm trading a pullback looking for a direction of continuation. In another market, you might be trading a breakout scenario, right? So I'm going to link in this video a breakout video that you guys can watch to understand how to trade a breakout scenario, meaning we would be up here looking to fill some of these clean candles, but we're not. So what I want to see is I want to see some sort of structural point. I want to see price close. That is this line here. So here's my structural point. I want to see a bullish close. The same way we got a bullish close every single time here. This was too far for us to take a trade. Now it's giving us an opportunity. Once I get that 15-minute time frame, remember one time frame, right? So one session, London open, you have to choose NY open, NYSE open, not exactly at the open. NYSE open can be a bit crazy, but London open or NY open or during the high volume time, I want to be looking to take my entries here. This literally happened about 15 minutes after the London open here on NASDAQ. So what I decided to do is I decided once this candle closed bullish, this is my confirmation, I can put a stop loss and I can target the next resistance here because that's going to be your next target. So what I end up doing is I take an entry here when price breaks the high. I want price to break the high to give me the extra confirmation. This candle needs to have a bottom wick. I'm going to target the next resistance here. In this situation here, this was giving me just a 1-to-1 here. I'm happy with 1-to-1s. Don't disregard them. They're very powerful. What's crazy is if I didn't take profit today, the next candle was a news candle because Trump is speaking. If you're trading any bit of the market recently, you know what type of joker card Trump is. So what we see here is we need to put price below a structure. That's always guaranteed. Either below a candle or below a structure. Never put stop loss somewhere random like this. Like you're just going to get stopped out. Always put it below a structure. Entry, break of high, bam, nice initial push here. And then boom, Trump candle, hello, after smashing TP. I took it just slightly earlier than what I have drawn here. Slightly earlier, I took it here. But Trump candle came and I was happy I took profit. Now, what's crazy is the market aligned, right? And it aligned to dump at the resistance. It didn't dump somewhere random. It dumped at a resistance. So I love to see that. That's why I love using horizontal lines because they're powerful. The second thing is during the trade, I have something called break even. Once I was about 70% towards my take profit, I move my stop loss from down here to my entry. Meaning if that reversed from there, I would be out anyways and I would be saved for such random candles, also saving myself and preserving profits. So this is a nice little strategy that I use to enter the trade. If we look at actually just rewind from current price action, I'll show you how many times that kind of happens. Look how we come down here. We have a structural point formed. We close above the structure. We have that same concept appear here. Bam. Then we start to play stop loss below structure. You can play the bigger picture. And then of course we get the breakout trades. Those are fun as well. This one was a breakout trade here, but look at the time. This is right at New York open. Didn't give you much continuation, so I doubt you get paid from this one here. Bit of a choppy day. If you look at this day, Friday, July the 3rd, this was actually a bank holiday. So we can't trust breakouts on bank holiday because there's no volume. If we scroll back a little bit further here, we can see actually the change of structure happening towards the downside. Bit of a big one, so you wouldn't have got an entry there, but you do get one of them right here. This one was a nice one where you closed above this structural point. Bam, that's your breakout trade. Same concept, 15-minute, one time frame. We close above, clean candles, stop loss below structures, and it gives you this. So you can see how many times it happens, and I'll show you right next to it. And a bearish example, look at this, bam, downside, right? We see the change of structure, bam, we're going back to the downside. Again, clean candles, and we end up reaching towards the bottom of the range here, right? Boom. So you can see right next to each other, there's many opportunities that give the same very similar setups here, where we have structure point. That's your structure point here. That's your structure point here. Bam, close above, close below, same entry, boom, boom. So very, very fun entry and obviously an entry that I take. So hopefully that helps. So I want you guys to listen to one more thing that is super important because these technicals won't mean anything if you don't listen to it. So leave a like and let's switch to that. So you've seen the chart work, but it doesn't end there. What I'm about to explain is one of the most important steps. And I need to add this on top of the rule of one. You've seen me on my YouTube channel post videos of exactly how I pass challenges and show my dashboard of the challenges that I pass. You've seen me payouts. You've seen me trade live on my personal account over 3 years. But the one thing that all of that has in common is I have consistency. I show up every single day, and others who have had success have consistency. And consistency is going to be the last bridge, because if you can't do something consistent, then you're not going to yield results. If you're just doing something random, blowing accounts for the sake of it, and not saving your money, then what's the point of even using prop firms as an outcome to stop you from investing into a personal account and losing all that money to begin with? The main goal is getting a payout. I see so many people pass an account, and that's exactly how the rule of one is going to allow you to secure your first payout. But the rule of one is a much bigger system. How I select the singular trades, how I select the session, how I'm able to navigate through drawdowns, through profits, and how I work my way towards a payout all matters. So if you're serious about getting funded and, more importantly, staying funded, that complete system is ongoing. You need to have an environment where you can see me trade live every single day, London and NY. And that's exactly what I have in my community, for me to be able to see your own leaks as well. So if you're serious, the application is in the first link down below. The only way we were able to generate the results that you will see on this link below is from exactly what I'm telling you now, accepting serious people and making sure that they get to achieve their goals and get the payouts that they deserve. So if you're burning money on challenges, just stop, apply the rule of one, and if you want to take things further, you know where to find me. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.